Hey, Anne. Hello, Del. Ramsar, I'm in Russia. Tula, 2 hours from Moscow. South of Moscow, actually. Hey, Mary. Not that close, but not that far as well. Yes, Mary, posted in the question tab. Jabon already posted one screenshot, and we'll take a look at them from there. I'll actually start with your trades, and then if you have time, I'll go through my trades. I had 2 winners, 1 loser today. So Jabon, let me get my Epic pen and let's see what you did. You trade VIAC. So, okay, I like VIAC based on the daily chart. And looking at the daily chart, we had a huge sell-off right there, right? Over 50% drop. We're sitting at a strong moving average, which is the 200 SMA. And looking at today's daily chart, especially after yesterday's small candle, I could anticipate that today you are going to go up, especially that we're extended from the 9 EMA on the daily chart. And remember, moving averages, whether they are on the daily, whether they are on the 15, 5, 60, they are similar, or they have similar rules. If the stock is extended from the moving average, eventually it will get closer to those moving averages. So looking at today's candle, I could anticipate that we are going to go higher. At the same time, we could definitely go lower to 45 or 40 area, somewhere down here. Looking at the 60-minute chart, we're having a range. And again, wherever we're going to break, whether it's to the upside or to the downside, you could give it a try, right? I personally don't like it much to the upside because of this moving average around here. And I'm definitely not liking it to the downside because we already dropped a lot. But still, this is not a bad trade out there. Looking at the 15-minute chart, there's sort of 3-bar play. And looking at the 5-minute chart, there is an ABCD pattern. So you took it to the long side. Stop loss was tight in this case, like really tight. I would have put it below these tweezers around here. If it's only 1 week, you could ignore it. But if it's multiple weeks, you definitely need to include it. Look at the 5-minute chart. Remember what we said, how the candles are being traded like? It could go all the way down, not making you low, and then squeeze back up. So I'm not telling you you need to put your stop loss at the C, which is here, because if this is the ABCD pattern, this is the C level. You don't need to put it all the way down here at the C, but at least within the candle, because we know that it could go all the way down, not making you low, and then squeeze back up. So you have re-entered, and again, you put the stop loss at the same place, while we know that it could still go down, not making you low, and then squeeze back up. I see you just decrease your position, right? You get sold out and you re-entered. Okay, that's nice. So you got sold out once, second time you re-entered, and it worked out nicely. So yeah, that was good. Should have been 1 trade and 1 win, and that's it. But well done on it. Price action assassin, make sure to post it in the questions tab, because here in the main chat, if members are asking any questions, I couldn't miss it if it goes higher. All right, Mari, let's see what you did. You traded GOEV, and let's take a look at GOEV. Daily chart, we gapped down so much. It's okay. And looking at the daily chart somewhere down here, we know that we could go to both directions. We could go to the long side and fill the gap, and we could just simply drop down with the direction of the gap. So basically, long and short play, both are good in this case. Looking at the 1-minute chart, you have a 2-minute open range breakdown. And the 5-minute chart, it's a 5-minute open range breakdown where you trade it to the short side. Not bad. Decent partials all the way down. I wouldn't say it's rushed. Like, this is a $10 stock and it dropped $1.50. So those are good partials. You added on a reverse ABCD pattern. I personally wouldn't have added around here. Yes, it was a pullback to this level around here and then a continuation. But I wouldn't have done that because I know that the pullback could be closer to the 9 EMA. And if you add around here, and keep your average exactly around here or exactly around here, you would get stopped out before a continuation. If you just added a small position because your average was way up here and you decrease your average all the way down here, then that's fine. And that's totally good. Because you know that it would pull back, bounce, and then continue going lower. So that's an ad. Worked out really well for you. Nice partials. Exited the rest of break even. Yeah, you see, so this was your break even. Should have kept the break even a little bit higher just to be safe in this one. Other than that, really good. Let's see, Dave. For now, I'm going to review one trade for everyone just in case we run out of time. If we still have time, I'll go through the second trades as well. So Dave, you traded what is this stock? What's this stock? What's this stock? Where is the name of the stock? I'm not really familiar. AMD, right? Cool. So let's see what we have around here. 26, so it's not today. Okay, good. AMD, this is the 15-minute chart. We're going up, having a spinning top at the high and a new low. So the 15-minute chart tells us that we could go down. Let's take a look at the 5-minute chart. The 5-minute chart, we're breaking one of the rules I usually try not to break, going against the 9 EMA on the 5-minute chart. And even if it breaks the 9 EMA on the 5-minute chart, we know that this is just a moving average and it could pull back before a continuation. The next thing, look at this. We were downtrending. Then we broke the trend to the upside. And the first thing I'm going to be thinking about once we start pulling back or once we start dropping is that this thing around here is a pullback and not a reversal. I'd be expecting something like this, or maybe something like this, or maybe something like this, right? I don't know when exactly it's going to bounce, but anyway, I'd be expecting a bounce until we're making a new wave to the downside. Like this is going down, coming back up, going down, coming back up, going down. And now you see that the trend is actually changing. And around here, you could definitely give it a try for the short plays. For the short play. Even here, you could give it a try for a short play because this is a candlestick pattern around here. This here is a bullish engulfing sandwich where the bullish candle gets engulfed by bearish candle from both sides. And this is a bearish pattern. So shortening it around here is decent because at least now you're having a double top. Shortening it around here is better because now you're also having a lower high and a lower low. Your stop loss was really tight. You shorted it based on the 1-minute chart. And look at this. You put your stop loss within the candle. You definitely needed to put your stop loss at the high in this case. You still would have been stopped out to the penny, but the best stop loss in this case was the high. Hey, noob. Adrian, let's see what you did. First entry is a dumb one, you can ignore it, but for the other entries, I went long for the breakout. I bailed out because of the shooting stars and the high volume. Was it a good decision or should I have stayed in? Okay, let's see. So you traded Mara. Let's take a look at Mara. You don't use moving averages on the 60, right? Not on the daily, not on the 50. You only use in the smaller time frames, I see. So daily chart could be a long, could be a short. Right, 60-minute chart, looking at this around here, I'd be more long biased. We're having double hammers around here, and hammers are telling us that this thing could actually be a long. First interest, you said, yeah, it wasn't the smartest entry because yes, the 60 was strong, the daily showed a strength, but in the smaller time frames, it was going down. You need those to align with those two around here, which didn't happen at the moment. And then you have re-entered, which is good. You entered at the breakout, for a pattern. This is the pattern. This is a bullish engulfing crack where the bullish candle engulfs the bearish candle and then it breaks it. So this is a decent entry. Nice add on a 3-bar play on the 1-minute chart. Now this around here, I wouldn't have bailed. Why? It is not increasing volume. Yes, it's kind of bigger than the previous few volume bars, right? But it's not that crazy. It's not climactic. Okay. Yeah, if it was something like this, yes, I would have been a little bit hesitant about it, but it's like slightly increasing. It's the average. It's fine. I wouldn't have really cared about this volume around here. Nice re-entry again. And for some reason, you are again bailing on the trade, again, for an increasing volume. But again, that volume is not so increasing. In fact, this volume around here could be an igniting volume. What is an igniting volume? Igniting volume is the increasing volume after the break of the range. It's the volume which the increasing volume which starts the move. If this volume, and if it was at least a little bit bigger, happened somewhere at the highs, somewhere around here, then yeah, that would have made me worried. Around here, it's totally fine. Both trades should have stayed in them, and I'm not sure if it worked or not, but eventually this would have been a good setup. All right, let's see price action assassin. What did you do? So guys, preferably send multiple time frames so that we can see what's happening on the bigger time frames. This way it's easier to analyze. It's really difficult to trade only of one time frame, for example, the 1 minute chart, because it's a little bit noisy. So let's take a look at CCL around here first of all and see what it offered us. So you traded it somewhere at what time was that? You traded it at 10:15. All right, let's take a look what CCL had at 10:15. So it had parabolic reversal. This is not bad to think of it for a short. We're having the first candle, second candle, third candle, then there is sort of 3-bar play, then a fourth candle, and at the high of the day, you are having a reversal candle. Let's get back to this thing here. At the high, you're having a reversal candle, and you're shorting it on a new 1 minute low. This is nice. This is a really good setup. That's the short. That's the stop slightly below the wick, so that you don't get any slippage, and then partial all the way down. Partial 1/3 of your position at 2, 3, 4, and 5 hours, and then sort out the rest at break even. So this was somewhere around the 9 EMA on the 5-minute chart. And if that was like that, you need to take the biggest partial around it, because you know that this place around here, it could bounce off and then form an ABCD pattern. If you are already low on shares, then it's totally fine. The partial is totally good because this is a parabolic reversal and you don't know how far it could go in your favor before bouncing. I also take 30% partials on my parabolic reversals, but I know that on the 9 EMA, on the 5, I'd be taking the biggest partial. Oh my god, that's so noisy, right, guys? Even I with headphones hear that thing. Anyway. All right, let me see what else we have there. Dell. It has been developing an ABCD pattern, but Tony, remember parabolic reversals are the reversals. Let me draw this thing here. So this is an ABCD pattern, right, Tony? On parabolic reversals, you try to catch this move here from B to C. And then if it's forming an ABCD pattern, you flip your position and you go for an ABCD pattern. If it's not forming an ABCD pattern and it starts forming a reverse ABCD pattern, you add to your position and you ride it even lower. This is the parabolic reversal. You're welcome. There is a webinar on parabolic reversals, and there will be another one which is more clean somewhere next month, hopefully, or the month after that. I don't know, but yeah, it'll be easier to trade those. Anyway, LI. I was also watching LI today, and I really wanted to trade it to the short side because on the daily chart, we're having sort of a reverse ABCD pattern, and I expected it to dump lower. On the 60-minute chart, we're also having a reverse ABCD pattern with a nice confirmation candle around here, which is the reverse hammer. At the open, you're having a 1-minute open range breakdown, which is a good setup. You took it to the short side, partial, added to your position multiple times. I wouldn't have added that much, actually. I would have waited for it to change the waves to the downside, and this is where I would have added. This candle around here would have been the place where I add, but unfortunately, this thing just did nothing, and it reversed like crazy. Not a bad flip, honestly, because this around here was a fake breakdown, and then it squeezed all the way inside the range. On the 2-minute chart, there is a double bottom right there. On the 5-minute chart, there is actually, if you take a look at the 10-minute chart, for example, this will be sort of a bullish engulfing crack around here. On the 15, it is as well, right? A bullish engulfing crack pattern. So you are taking it to the long side on the second candle, stop loss below this wick around here, because on a bullish engulfing crack, what's our stop loss? The middle of the range. Long and partial all the way up. I personally wouldn't have taken it to the long side. I would have waited for a short play, which never happened. But this around here was also a good setup deal. Nice management. Cody. So Cody traded JMIA. I would have been short biased in this thing based on what I see on the daily chart, but at the same time, a little bit long biased because we are bottoming. We are bottoming at around a daily level. It could just simply also reverse and go to the long side. You see on the 60-minute chart, we're also bottoming. And unless we're breaking this area, I will not be much of a short bias. So it dropped down strongly at the open, bottomed around here, and Cody took it to the long side. Not bad, Cody. And I bet your stop loss was the daily level, right? Nice long stop loss around the daily level, because if it breaks this daily level around here, you could assume that there is nothing below it now. It could just downtrend. And as long as it's holding it, this is a good sign. Nice partial, held it through these huge pullbacks, another good partial, another good partial. And look at this. He has a level around here, which it's breaking on the 3-bar play on the 5-minute chart. Add and more partials. That's good. I guess you're still in it, right? I personally wouldn't have added around here. Could you tell me why? Tell me why this was not a good add. There is a setup forming now. Anyone? If you add it here, it's good because it is an ABCD pattern and it's running up and you could take another partial. Exactly, Dardan. So look at this. Now it's going up, it's making the head, and now it's forming the shoulder. And it simply could break the neckline. Your stop loss is good, at least it's at the neckline, and then drop lower. Let's take a look at what it's doing. I'm actually curious what GMIA is forming right now. GMIA. So far, it's actually working in your favor, which is good. Yeah, I personally wouldn't have added around here because of the potential head and shoulders pattern. We'll see if it's going to break or it's still going to reverse. Other than that, really good management, Cody. Noob, what did you trade? FUTU was consolidated to pre-market, played it for an open range breakout. So I see this. You have your chart zoomed out. I like how you're looking at the chart. This is really good. So he has a trend line. He see that FUTU is on an uptrend. At the open or before the open, there is a huge red candle which is breaking his down trend line, and he's taking it to the short side. Partial all the way down and added for 3-bar play. This is a good place to add 3-bar play. That's awesome. Unfortunately, it didn't do anything for you. Your average was still high. I like that. I like the fact that you didn't add around here and move your stop loss here. That wouldn't have been so smart. You want to always keep your average closer to the 9 EMA on the 5 in case it bounces, right? But here you could have exited a little bit earlier. Could you tell me why? Why in this case you could have exited a little bit earlier? Holding through this pullback is good. Exactly, Gigi, that's good. So it's breaking down, and after the stock breaks down, you could expect it to run lower, right? This thing broke down and immediately went back up, forming a double bottom with the second bottom higher than the first one, then breaking this range around here. So good job. It's good to aim for the ATR. I also did the same thing on PLTR. I was aiming for the ATR, but unfortunately, it did the ATR to the opposite direction. So I shorted it here at 21.30. I got over 3 hours on this thing. Let me get back to my PLTR. There is my short around here. There is my stop loss around here, so around half the candle. I started taking my partials on this thing at somewhere around 3 hours, 3.5, somewhere around 4 hours. I ignored this drop around here because by then I had only 10% left, and I wanted to catch the ATR on this 10%, and I put my order at 20.30 or so. Unfortunately, this thing double bottomed. I thought it was a reverse ABCD for starters, where I added to my position, and I moved my stop loss. Look at this. When I added to my position, I didn't put my stop loss at the high of this week. I put it slightly above the 9 EMA just in case it wicks and then goes down, because I know if it breaks and it closes above this, most probably it's going to change the trend. That's why I'm keeping the average a little bit higher. So didn't do the average, didn't do the reverse ABCD pattern, and it squeezed all the way up. Now look at this move from 20.90 to 22. That's $1.10, and the average range on this thing is sitting somewhere around $1.40 or so. But basically, it almost made the average range to the opposite direction. Sometimes they do that. So if you're having a huge position left, make sure to just take small partial out there. Let me quickly go through the through the trades I've taken here as well, and then I'll finish the second round there. So TLRY, I was looking at it for a short play based on the daily chart. There was a reverse hammer on the previous day, so I'm a little bit more short biased. At the open, we're breaking down. I took it at the break of this pre-market level down here. Put my stop loss somewhere on these candles, and it just got me stopped out on the very second candle. Not bad trade. I'm totally fine with it. X, daily chart looked really strong on it. 60-minute chart, sort of an ABCD pattern. But look at this, my note here. I knew that this one around here will not be a runner. I knew that it will go to the previous day close, and I wrote this note. Take it to the long side immediately after the bounce of the previous day close. Why is that? Because market does not love gaps, and today we gapped up, and the previous day close is not that far. When I see that the previous day close is that close, or yesterday's low, or yesterday's high, I usually wait for them to go to it and then bounce, and I would take a parabolic reversal out from here and hold it for a huge trend. This happens a lot, and that's the main play I wanted to play to use on X today. A long after the bounce of the previous day close. Anyway. I saw that it was selling off, squeezed back up, and I decided to give it a quick scalp for an open range breakout. This is a bearish engulfing crack, so I'm taking it to the long side, stop loss in the middle. Then this candle goes lower, comes back up. I add to my position. Now my new average is sitting around here. My stop loss is around here. I got my 3 Rs, and unfortunately, I didn't take a big partial. I took only 30% partial. I exited the rest at break even. Now look at this. 1, 2, 3, 4. 4 consecutive candles on the 5-minute chart, going to the previous day close as I planned, having slightly increasing volume at the low of the day, doji, and a new high. That was supposed to be my entry. That was supposed to be my stop, and then ride it for an ABCD patterns all the way up. Unfortunately, missed this thing, and I just didn't trade it after that because at 10:30 I just stopped trading. I have to do some studying. So yeah, TLRY, PLTR, and X. Those are my 3 trades for today. Might do a couple reversals or parabolic reversals later if I see some. Now let's see a few more trades. Mari traded VIPs. So again, as I said, VIPs based on the daily chart, it could go both to the long side and to the short side, right? On the 15-minute chart, it's more of a long. We're breaking this area around here, 30, and you have room all the way to 32.50. You see how close or how precise those levels are? What did you do? You traded this thing for a 5 or 10-minute open range breakout. Stop loss, I would put it somewhere here or a little bit above the wicks, partial all the way up. Added to your position with more partials and added more down here. So this is the one, and this is the 5, right? I assume this is the 5-minute chart. 935, 940, 945. Cool. Okay, I see that. So this is a good long. This is a good add, and this around here is a little bit risky. It was a short, right? This was a little bit risky short. If you want to take it to the short side, that was the first candle, the second candle, the third candle, the fourth candle. So this is the place where you are interested in trading this thing to the short side. Check if you're having reversal candles at around 10:15, and if you do, you could short it at the high up here. Unfortunately, this thing is not parabolic. It's just slightly going up, literally not parabolic. I would personally avoid taking parabolic reversal on it. Now, the moment it reaches the 32.50, if there is a reversal candle up there, I could give it a try for a quick parabolic reversal. Let's take a look at this one. Dips at 32.50. Did it give us any good candle for a reversal? It didn't. So basically, even around here, I wouldn't have tried it for a reversal. The long, though, is really good. Dave, let's see this one. American Airlines, AAL. So let's take a look at this thing, first of all, on the bigger time frames. Load. Why are you taking so long? Cool. So American Airlines, looking at the daily chart, double hammers, and definitely more long buys on this thing. Looking at the 60-minute chart, this is the 8 o'clock candle, this is the 9 o'clock candle, a new high, definitely long. We're having a bearish engulfing sandwich, but we never had a new high, which is why there was no good entry. But this one, after a fake breakdown and closing as hammer, was definitely a good entry to the long side. Let's see how you traded that, Dave. Wait, well, this is not from today, I guess, right? Yeah, it's not. American Airline 5-minute chart. Yeah, it's not today. All right, let's see what you had around here. Huge drop, pull back, right? Hanging man, and you took it to the short side. I wouldn't short it because of the hanging man, but the 1-minute chart was good. If the bigger time frames, and I see that the bigger time frames are starting to drop down, you are almost forming a bullish engulfing sandwich, which is a short pattern. And if the 60 was also downtrending and the daily downtrending, I'll be looking at a trade for this thing to the short side. 1-minute chart double top with the second top lower than the first one, breaking the level. That's good. Nice short. Stop loss at the high of this level around here. Good patience, holding to your targets. No reason to exit all out because we know that the stock will not just simply go down. It will do pullbacks. And the biggest problem a lot of us day traders are having is being afraid of pullbacks. If you want to hold on for bigger moves, literally don't be scared of those pullbacks. Just hold through them because you know that the pullback could be even 50%, which is all the way to view up. I would hold this thing to view up. Above view up, I would definitely bail on it. If it's giving you a reverse ABCD pattern, add to your position. It's not breaking yet, right? Bullish engulfing sandwich, where the bullish candle gets engulfed from two sides. Add one more time, and then at the break, definitely take a partial. Other than that, the trade was good. J-Bone traded bingo. This is a good daily chart, as we said, good 60-minute chart. This is the 5. Now, there is a mistake around here. Why wouldn't we short it here? Anyone? What's the broken rule there? Why wasn't it ideal? 3rd-minute candle, didn't see this until afternoon. Okay, cool. I see that. You actually saw that. I need to read. Good job, J1. So look at this. He knew his mistake, but he decided to share this with us for everyone to notice and to try to see this real time next time. We try not to short stocks on the 3rd consecutive candles because we know that usually after 3 candles, we are having reversals or we are having pullbacks. Better to wait for a pullback and then a continuation if it's giving us that, but it didn't do that. It simply just be reversed. Good job, J-Bone, realizing that, and nice exit. I guess you cut your loser. I bet your stop loss was somewhere around here and you exit a little bit earlier after you noticed that the entry was late. Really well done. If you waited, it never gave us a setup, right? This is the 5-minute chart. We wait for a pullback, and the pullback means at least a new 5-minute high. There is our new 5-minute high. And then you need to wait for a new low. And if that happened and you take it around here, it's a good setup, even if it fails. So let's see if there is anything tradable right now. I agree with that, J1. Looking at the 60, it was awesome, but I lost a lot of trades only because I tried to take a breakout because the 60 broke. We always want to combine this with this and then find a setup on this. Without a setup, ignore the breakout. They'll be working sometimes, but a lot of times they'll be failing. Cool. So let's see if we have any setup we can trade or any stock we can watch. This thing is crazy. It's really sad I missed this one, but nothing you could do, right? LI still going higher. PLTR going higher. Let's see what else we have. Let me actually see the trade idea scanner if we have any parabolic reversals called out there. If not, we might just call it a day. If you guys are watching something interesting or something which is forming, you can call it. Take a look at it. So 1140. Can was called at 1140 and Tiger was called at 1115. 1140. This is not bad. This is where Can was called on a scanner, somewhere around 1140. But it's not that far from the 9 EMA. I see that it got way farther here. But there is no reversal candle, which I would have been interested at. Tiger at 1115, same thing. Yes, it reversed, but it's not a good parabolic reversal out there. Baidu, let's take a look at Baidu. This is hard because we are uptrending nicely. Then we had a fake breakout, and now we could just simply be downtrending, right? I mean, we had reverse ABCD there, and now we're breaking, but still it could just continue dropping down. It's hard to tell on where this thing is going to go. The average duration of this thing is somewhere around $20, and we already moved that. It could come back to the high of the day, but it's hard. There is no clear setup. The 60-minute chart, shooting star at the high of the day. The daily is also weak overall, and we're getting closer to the 9. It could just drop down. Salim, let's see your trade. So Salim traded Apple. Nice. I see what you saw there. The reverse hammer. That's why you were short bias. Daily chart gap down. More short bias. 15-minute chart weak, right? Mistake around here, Salim. You are shorting the stock on the 1, 2, 3rd candle, right? If you shorted it here, I would tell you it's okay because at least you're having a 3-bar play on the 3rd candle. I mean, it's still not the best, but if you're seeing a 3-bar play on the 3rd candle, you could play 1 bar. Like short it on the 3rd candle, have your stop loss at the high of this candle around here, and play this candle maximum. If you see a 3-bar play forming here, like there is a doji and then there is a low around here, you could play it for 2 bars. Okay, because we know that there will be 1, 2, 3 candles, right? But shorting it here was early. So that was supposed to be avoided. Then you try to take it to the long side. And if you take this thing to the long side, your stop loss should be somewhere around here. The low of the second lowest candle you have, just so that you avoid slippage. In this case, it will be 1 entry. That will be your stop loss. But then think of it this way. If this is your stop loss, is this a good risk to reward? It will not reach the 9 EMA because the next candle will get lower and lower and lower. The risk to reward is not there. So I just avoid these longs, and I'd be waiting for a continuation. Then you're having a reverse ABCD pattern type 2 around here. That's a good short, and play it. So instead of chasing it, and instead of forcing a reversal when there is no good risk to reward, wait for the setup to form and then take it to the short side. Remember, you don't need to be in every single move, and you don't need to force a setup. Just wait for a setup to form and then get into it whenever it is ready. You need to be patient in these markets. You see now this thing is dropping. I mean, it's not that clean. So yeah, that will be it for today, guys. If you have any questions, feel free to ask. If not, I will upload this trade review session in YouTube in like 5 or 10 minutes. And I'll talk to you tomorrow. All right, thank you, everyone. Have a great day. And when you say after confirmation with the 60-minute chart, wait for a 5-minute chart setup before entering a trade, you mean a pattern, ABCD pattern, or candlestick? Yeah, it could be an ABCD pattern. It could be an engulfing candle, right? It could be a parabolic reversal. It could be double top. It could be head and shoulders. It should be a setup on the smaller time frame, combined or which coincides with the direction of the move on the bigger time frame, Karen. You're welcome, Marketman and everyone. All right, see you guys. Bye.